Ready. Good morning, everybody. Let's get this started.
Good
Thank you
morning.
for coming and attending the class.
Good morning, everyone. My name is Ella. I will be your moderator today with Sheetal, one of our affiliate business partners. Thank you for joining us today for Beyond Traditional Loans, how non-qualified mortgage and portfolio loans help you close more deals. We're excited to have you with us for this informative session that's designed to expand your knowledge and give you practical tools to better serve your clients in today's evolving market. Before we begin, I'd like to take a moment to introduce our presenter today. Today's webinar is brought to you by one of NCGR's valued affiliate business partners, Sheetal Sani of Cross Country Mortgage. Sheetal brings a wealth of experience in the lending space and has a strong passion for helping real estate professionals navigate complex financing scenarios. Her expertise in non QM and portfolio loan solutions makes her an incredible resource for agents looking to close more deals and support a wider range of buyers. We're grateful to have you, Sheetal, here with us today to share her insights and expertise. Sheetal, the floor is yours. Thank you.
Thank you, Ella. Thank you, everyone, for joining. I'm excited to present this to you guys. And the reason I'm excited to present this because these products that I'm going to cover today, portfolio lending, non-traditional income lending, non-QM lending. What does QM stand for? Is non-qualified mortgages. I'm going to take a deep dive into it and explain this uh, in make it really simple for you. And the goal of this class is that you are able to close more loans by a better understanding of these new products out there. Okay, so the whole goal is knowledge that you can share with your clients, gain their credibility, and it makes you. So, what happens is, as a realtor, your clients lean on you for all kinds of help, not just real estate. They think you guys know it all. They want you to sometimes wear mortgage hats, become an attorney, you are their go-to person for everything. So the more you know about these products and the more you share is better for you. It's better that you know more than your competitor. Okay. So lending is about two buckets. I'm going to I'm going to talk about lending as two buckets, okay? Bucket number one is government backed loans. I've been doing this for 30 years, and the first 20 years in my business, that's all we did. That's it. We did only government backed loans. I'm also an instructor. I teach a lot of classes on government backed loans, which are FHA, veterans, Fannie Mae, and Freddie Mac. These are the loans that you call conventional lending, right? But these are government backed, 203K. What happens in a government backed loan? The government says, we're going to back these loans. We're going to allow a family to buy their home with as little as 3% down, 3.5% down. We're going to give good 30-year fixed interest rates. However, we need to make sure that you qualify with your income. We want your W-2s, we want your taxes for 2 years, we want your pay stubs. We are going to do a debt to income ratio. We want to make sure that you are able to repay the loan. I know Dennis is saying why the PowerPoint has not changed, guys, because I will be changing it. Trust me, it's happening. Okay, I just want to give you an introduction about this class. So those are government loans, right? Now we all know that not everybody qualifies for government loans. We have business owners. They make a lot of money, but they don't report enough in their taxes. You look at their taxes, and if I sit and calculate the income, it's low. However, they have large down payments. They actually are making more money. It's just that if it's a cash business, they don't just report it all. Yes, we all know that. Yes. Okay. So what happens is now we have so many options for people who don't qualify for a government loan. And that's called non QM, non qualified. Qualified loans, government bucket. Non qualified is what we're going to cover today. Okay, these are loans that the government will not back fund, they don't meet the government loan guidelines. So they're unique situations, and I'm going to go over several with you today. All right. So, cross country mortgage, just a little bit, really quick about us. We do all of these loans in house, we fund them. We underwrite, we fund each and every of these loans, and 40% of our loans, we get exceptions approved. We're not selling this to Fannie, Freddie, Ginnie Mae. We're not selling this to the government, okay? So therefore, we are able to go back to an underwriter and say, hey, listen, we need an exception on this and this. Instead of 25%, can we do 20%? Instead of 15, can we do 10%? The credit score is just 2 points, a little bit lower than what's required. Can we get an exception? So many loans, we grant exceptions because the goal is to work together to take it to closing. Okay, that's the best part about these loans. They are way more flexible than a government loan with the guidelines. Okay, so cross-country mortgage, like I said, we do these in-house. I don't know if you know this, but we've been the number one retail mortgage company in the US for the last few years now. One out of every 37 deals written in this country is a CCM loan, cross-country mortgage loan. Okay. Okay. I mean, we do all kinds of loans. These are government loans, right? Fannie, Freddie, State Bond, FHA, VA. It's a whole list. These the first few are the government jumbo loans, we do construction land loans. Today we're talking mainly about non-qualified mortgage loans. Okay. Okay. Non-traditional income. Or they had a past event. They had some issues with their credit where they don't qualify for a traditional loan. Okay. They don't have W-2s. They don't have pay stubs. They don't file taxes. Or some clients who are asset heavy, which means that they have a lot of money, but they don't work. No job, no tax, but they've got a lot of money. We can fund just by getting their statements of their portfolios, of their investments. Okay. ITIN, real estate investors, unique income calculations, or complex tax situations. We'll go over several examples of all of these. Okay. We're going to cover all of these today. Asset qualifier, bank statement loans, foreign nationals, full docs. These are deals that a lot of times, like I am known in the industry as someone who does a lot of difficult loans. Not that I just want to do difficult loans, but someone who has an understanding on how to take a loan rejected and then resubmit it, repackage, resubmit it to get a quick approval. Okay. Investor cash flow, 1099, profit and loss. Okay. Now, let's talk about a scenario. Okay. All right. I am working with a buyer. He's self employed. Let's say he owns a restaurant, owner of a restaurant. Up until we had these portfolio loans, guys, what would we do? I'm sitting with them. Hey, give me your taxes for the last 2 years. I want to check your credit. Give me your assets. Now, when I see that there's not enough income reported in the taxes, we start saying, you need to report more income next year or get me co-signers. We need income. Okay, no more. This is thing of the past. Now, our current conversations on how we pre-approve a restaurant owner is as follows. After I sit down with them, I literally will see their taxes. I saw that they have losses. Okay, so I already saw that this client does not report income and doesn't want to. So now I'm going to ask him, hey, how's business? Oh, business is good. He says business is good. Okay, how much money do you make on a daily basis approximately? Okay, I make $1,000 every day. What do you do with that money? Do you put it in your bank? Yes, I do. Okay, can I have 12 months of your business bank statement sent to me? We will review the deposits that he makes in the business bank statements for the last 12 months, and we will use and calculate income based on the deposits. We do an average. Okay. We just want to see that overall, each month, there's somewhat a consistent pattern of income deposits. It cannot be he deposited 70,000 one month and then for 2 months he didn't deposit anything. So we don't want to see like a huge up and down, like somewhat there's some kind of consistency in the business. Everybody here with me? Guys, I want you to be able to ask me questions as we go along. Don't wait for the last minute because I don't want that towards the end your questions remain unanswered. If you think of something, please unmute, ask me the questions, and you can go mute again. Okay? Now we look at the 12 months. Okay, someone's asking, does it have to be 12 months minimum? The answer is yes. Because you see, we're not looking at their taxes at this point. We're only looking at their business bank statement, and 12, we want to at least see 1 year. We can see more if he has more, but minimum is 12 months. Good question. So now let's say I look at the 12 months and I get the income, and now I'm going to qualify same debt to income ratio, and I'm going to qualify this client. The minimum down payment that you put is 10% down, just based on 12 months bank statement income. All non-QM loans, everybody, please make a very important note. There's no PMI. No PMI, no MI. Even though it's less than 20% down, no PMI, rates are slightly higher. But the fact that there's no PMI is a good thing. Okay, someone's asking, what's the interest rate on this type of a loan? The interest rate will depend on the credit score of that person, property type, credit score, down payment. These are the three things that will give us the rate. But just to give you an idea, the rates up, I would say that they're 0.5% to 0.75% higher than the normal interest rate. So if the normal rate is 6.3, you're looking at around 7. But no PMI. There is no PMI in these loans. That's something very, very valuable for you to know. Okay? All right. Now we have all kinds of options. We can do 40-year, we can do 30, 15-year, we can do 5x6 ARM, an adjustable rate of a 5-year fixed loan, a 7-year fixed loan, a 10-year fixed loan. We can get them a lower rate by offering all these options. We have many more options for them in these portfolio loans. All right? Okay, good. Now I want to bring one thing to
Question, Vital, in the chat.
Mhm. Sure. What's the question?
From Christopher, can you refinance these loans?
Oh, yes, of course we can refinance. I do a lot of refinances on these loans, whether it's purchase money or refinance money, all the products I will talk to you about, we can do both. Good question. Thank you. Thank you for asking. Okay. Now let's say I get the 12-month bank statements and I review everything and they're not consistent. I have gone through this where I see the 12 months, I can't use their bank statements because 1 month they have a lot of income and then they don't have any income for a few months. So for bank statements, like I mentioned before, we need consistency, somewhat, not too much, but somewhat. So now when I see, oh my God, I can't use the 12-month, now what? I have another program. It's called Profit and Loss Only. Guys, I'm going to go over the slides with you. It will be a refresher. When we do the slides, whatever I just say, we'll go over it again. Okay. So now I look at him and say, okay, listen, I can't use a 12-month bank statements, but I have a great loan. It's called profit and loss only. So now I don't need taxes. I don't need bank statements. I just need a simple P&L, profit and loss, on a piece of a letterhead of their accountant, the person who does their taxes. Profits for 2025, these were the expenses. Here is the net income. That's it. That's all we need. And we close the loan. For the profit and loss, we need 15 to 20% down. A little bit more because, again, what happens is the down payment is more because the risk is more. The documents are less. The minute you take away the lease document, then that's when it impacts how much money you need for down payment and what the rate's going to be. Fair enough? I do a lot of profit and loss loans because there are people who just, their businesses are not very streamlined, they're not predictable, but they do qualify. They have the 20% down, they qualify, and we do it. Okay. Now, I want to tell you how time flies, right? Clients I met in 2025, when I looked at their bank statements and they were not very consistent, I told them, listen, just make sure that you make those deposits in the bank. Please don't spread it out. Don't take the money and put it in your personal account. Just be organized. You know that I'm going to need 12 months of consistency. Just do it. Start today. So I do have clients who are going to be buying this year. And now they've done it. It's not a big ask. You're making the money, just put it in one account. Make my life easy. Give it to me and we can qualify you. So you as realtors also, guys, is good for you to know your self-employed borrowers. You can guide them. You can start also training them and giving them some information. I will make a suggestion. Don't become a lender. It's not worth it. Lending is very, it's very intense. Allow a lender to give them the actual guidelines because we will check everything and then give them a suggestion. Okay, it's not an isolated suggestion. Okay. So everybody understood what I said, right? We don't need the income anymore. 12-month bank statements, if that's not good, just a profit and loss. Yeah? Any questions? Okay, good. So this is called the expanded bank statement program, right? It allows self-employed borrowers to take advantage of tax write-offs to qualify for the mortgage. They no more need to report more income, pay a lot of money to the IRS. They don't need to do that. This is a solution. Okay. It's a simplified underwriting method for borrowers with multiple or complicated businesses. So if somebody has 2 or 3 types of businesses, again, this becomes a simpler way of qualifying them, just the 12-month bank statements. Okay. ITIN and DACA borrowers. ITIN is a group of people that they're not legal. They have a tax identification number so they can fill out their taxes. That's the ITIN borrower. In DACA, it's an immigrant, right? That now you can get FHA will not give money to anyone in DACA, but you have other options to lean on. You could do a 12-month bank statements, which is the minimum. You can also do 24-month bank statements if you have a solid, consistent 24-month bank statement to provide. Okay. And who are the beneficiaries of this program are self-employed people. They have non-traditional income or inconsistent cash flow. I've also done the bank statement program, guys, for Uber drivers, Lyft drivers, construction, 1099. They're all self-employed. Anyone who's 1099 is also considered self-employed, right? So all of these people, it's a very, very common thing. Consultants, okay? 90% LTV, which means 10% down, no PMI. The minimum credit score, 600, which is really low. The rates are not going to be favorable if you have a credit score of 600. Guys, when I meet a client and I check their credit, If their score is 600, I will spend a lot of time with them because my goal is to get their credit scores up. I'll tell them what to do. There's no charge for it, but I want them to get a good deal. I want them to get a better rate. While they're looking for a home, we want to always, whether it's a government loan, any client, that's the number one thing I'm going to do is try to improve their credit. So important, so important. It's hard to change someone's income. I cannot tell them, hey, go get a raise, make more money, but I can definitely, work on their credit. Okay, for a better mortgage option, for a better rate option. Amortization, we have different amortizations available, loan amounts from 100 to 3.5 million. Okay, debt to income 50, which is high. I do see a question come in, and let me address it right now. Hey, Ella, where do I see questions? I don't want to miss it.
It should be in the chat.
Yeah, I don't know where the chat is.
It's
That's
the bottom.
exactly what I want to see.
So it's the bottom next to the raised hand. So if you click on that, it'll pop up.
Oh, here it is. Okay, yeah, it was getting covered. Okay. Oh, wow, I see so many chats over here. Okay, got it. So let me see what all I've missed. Okay. Can you refinance? Where can I find these loans? I don't know what you mean by where can you find. We do it at Cross Country Mortgage. We do it all day long. So I can give you, I've given you a flyer of all of these programs, just like a cheat sheet. You also have this PowerPoint. So by the end of it, if you need more info, please, let's have a call. Where can I find it? Bank statements and P&L needs to be done through an LLC or an owner's name. Great question, by the way. If you are buying your primary residence, then you're going to do it in your name. If you are doing an investment property, then we do it in an LLC name. All investment properties, most of them, we do it under an LLC financing. It gives us options of offering our client prepay penalty and therefore reducing the interest rate. I'm going to cover that in a little bit. Is there a formula you use to calculate how much income a buyer needs to make to qualify for a particular amount of mortgage? 100%. That is our job. That is what I do every day. When you refer a client to us, that's what we do. Determine their income, and then there is a formula. It's called the ratios, right? We're going to add the mortgage payment to all the debts they have, car loan, divide that by the monthly income. That's how we get that debt to income ratio. In this case, max DTI is 50, as you see on the screen in the PowerPoint, right? That's how we do it. The full mortgage payment, we add all their monthly debts, divide that by the monthly income. That is the formula that we use to qualify all borrowers. Can a borrower with inconsistent income, example real estate agent, also use the W-2 of a spouse for these programs? Great question. Wow. Can I repeat this question, guys? The question is, if there are multiple borrowers, one is self-employed with inconsistent income and gets a 1099, has a spouse with a W-2? Yes, we can combine the two. Excellent question. We do that all the time. Okay. I think I'm caught up with questions. If I missed anything, please let me know. You can also unmute and ask. Okay. All right. Okay. Now I want to talk about investor mortgages, investor cash flow mortgages. Guys, realtors, you guys, thanks to you all, people make a lot of money. Your clients make a lot of money. Sometimes you get a great deal and you know it has equity. It's a good deal. It's below market, or for whatever reason, it has an opportunity. And then you call some of your clients who have money and are interested potential investors, and you say, listen, I have a great deal. Do you want it? Right? And then sometimes you can say, how about I buy this deal? I want my family member, I want in my inner circle someone to get it. It's just so sweet. So you all should pay attention to this investor loan, not just for yourself, but for your family, loved ones, and also your clients. Okay? DSCR. Does anybody know what DSCR stands for? Anyone? You can type it if you know. It is written on the screen. Debt service coverage ratio. Okay? Debt service coverage ratio. Let me tell you what that means and how cool this program is, okay? So here's what we do. If you want to buy an investment property, we don't care about your job, about your income, about your taxes. We don't care about your job. You could be unemployed. We don't care. You're an investor. Our focus is not on the borrower. We're not, I don't care. Your income doesn't matter. It's not the focus is not on the borrower. It is on the property itself, the subject property. I want to know the price, the taxes, the down payment, the rental income. As long as the rents that we receive covers the mortgage, we can do the loan, 20% down. I'm going to repeat it. As long as the rental income is enough to pay the mortgage, we can do the loan with 20% down. No questions asked, no job needed, no income needed. Now, in this case, in this particular investor loans, we have the option of doing the entire purchase in an LLC name. We guide our clients. I will guide the clients, tell them exactly they can form an LLC, what documents we need. We close under the LLC name. Now, when we close in an LLC name, we have an option to give the client lower rates by offering prepayment penalty. 1 year, 2 year, 3 year, 4 year, up to 5 years. So we'll give, hey, listen, no prepaid, this is the rate. If you take 1 year prepaid, this is the rate. 2 year, 3 year, this is the rate. Let's talk, let's discuss what's good for you. If the client wants to sell it in a year, then we'll just do the 1 year prepay. Some of them say, I want to sell it in 6 months, then we'll do no prepay. But some people say, no, I want a 5 year because I want the lowest rate possible. The rates that I have locked in have been in the high sixes for a prepay penalty. This is a very good loan, guys. Very good. This is an amazing loan. Like I personally, what I'm talking about, these portfolio loans, they constitute 41% of my business last year. That's a big number, 41%. Because these loans have solutions for people who were not getting a mortgage traditionally. Okay. So let's go over this. Investment based off its rental income instead of the borrower's personal income. Yes? Debt service coverage ratio. It's called the DSCR loan. All commercial lenders, this is how you get a mortgage by doing the DSCR. The focus is that, hey, listen, this property is self sufficient. There's enough rent to cover the mortgage. No problem. We can do it. Okay? It's a better solution to a hard money loan. Hard money loans have higher interest rates. Rates are way too high. These rates are not high. So first, the best rates is a government loan. Then is these loans that we're talking about today. Third is hard money. The terms and the rates for hard money are too high. Okay. No DTI or personal income. We went over that. Who benefits from this program? Experienced and mom and pop investors interested in long-term financing option. Doesn't matter. It could be your first investment. You can do it, or whether you're a seasoned investor, you can do it. Question is in the chat room now. Okay, how does the investor prove the rental income before purchasing the property? Oh, what a nice question. So I will ask the real estate agent to give me the market rents. Ultimately, we're going to use the rent that the appraiser put in the appraisal report. So therefore, I want realistic rents. I don't want inflated rents. And I start the loan. When the appraisal come, it's lower, and now we're like struggling. Now I have to say, oh my God, I have to either reduce the rate, increase the down payment to make the numbers work. Okay? In a DSCR loan, another question I see here, are the taxes included? Yes. What is included is principal, interest, taxes, home insurance. If it's a condo, association fee. Here, look at the screen. It's rental income, and over here is PTI. You see this one? This stands for principal, interest, taxes, home insurance, and association fee if it's a condo. It's a total monthly mortgage payment. Good question. Can a person with inconsistent 1099 less than 30,000 income can I buy a house with DSCR? Okay, here's the question. Can a person with inconsistent 1099 less than 30 income buy a house as DSCR? The answer is 100% yes. How about this person has no 1099, is unemployed? Let me go further. How about this person has losses in their taxes? Negative, negative. I can still do it because I don't need taxes. I don't need 1099. I'm not going to put employment information in my application. Somebody unemployed? Perfect for DSCR. Did I answer your question? Can the investor live in the property if there is more than one unit? That's a great question. You guys are asking very good questions, okay? The answer is no. This particular loan, the DSCR, you cannot occupy that property because we are using the rent. I need rental income. I don't want you to go and stay there. I'm using rent to qualify, so you please don't, you cannot live there. And we are doing these loans as non-occupant investor loans. Cannot live there. If you could live there, then everybody would qualify. You mean a first-time home buyer would qualify? No, this is purely for investors, what I'm talking about. Okay? Did I answer all questions, guys? I wish you guys would unmute and I could hear your voices. You're able to do that too. But the least is I want to make sure. Okay, yes, thank you. Okay, good. No problem, Penny. That's fine. So 85 LTV, that's 15% down for a one-family house. Otherwise, it's 20% down. Minimum credit score 620. We have all other options, fixed rates and adjustable rates, loan amounts 100 to 3.5 million. Maximum DTI, none. I don't need income. So there's no debt to income ratio, right? I want to say something about the credit score. While it looks very nice on screen when you see 620, but the rates are high. So we always, if I see a 620, I'm always coaching my clients to go and improve their credit. I'll help them. I'll tell them exactly, I'll give them a roadmap. Do this, do this, do. I give them exactly a very precise roadmap on how they can bring their credit scores up. Okay, but I do that for every single client because I really, really want them to get a better rate and better financing options. Okay. Okay. Any questions on the DSCR? It's a very good loan. We do this as mixed use. It can be a DSCR for a one family, two family, 3, 4, 5, 6, 7, 8 unit building. Doesn't matter. We can do it all in house. It's amazing. Okay, very popular. I'll tell you what's trending right now. I have many clients who are investors, but what has happened in the last 5 years to real estate prices? Right? If you purchased a real estate, you invested it, the value of your investment has gone up. Now, investors are always looking for money because they're always looking to buy the next property. They know the game of real estate. They purchased real estate, they've made money, and they want to continue. But you need money. We're doing a lot of cash outs, refinance cash outs, and reducing the interest rate all at once. The interest rate was higher 3-4 years ago. It's lower now. So we refinance it, take their money out, and reduce the interest rate. Everybody got it? That's a trending thing in our world. Any questions? Okay, good. Now, I love this one, guys. So excited to talk about this. Please, please pay attention, everyone. This one is called 1099. The program is 1099 only. All of you, realtors, contractors, so many people, the population of 1099 is growing. And how? Many people, even the younger generation, they're doing these side gigs. They want to, whether they want to drive Uber, they want to do this, whatever they're doing a lot of like becoming a little self-employed. That's a growing population, and this is a very popular loan. Now, everybody pay attention. No more telling a realtor and a contractor and 1099 recipient, hey, please don't write off so many expenses. I want to see your high net income. None of that stuff. That stuff is outdated. We used to do that. In this new world and with these new opportunities and loan options, we use 90% of what's in the 1099. The total income you made in the 1099, let's say you made 100,000. I'll use 90,000 as your income and just do the loan. 10% down for primary residence. Guys, I wish I could see your faces because I hope you're happy to hear about this. It's a great loan. And I do this a lot, because 1099 people, they don't want to pay the IRS too many taxes. So it's not fun for them to, hey, just go report income. No, you don't. I don't care. Don't report it. I can just use 90% of your gross, what's on a 1099, and do your loan. Okay, do you like this, guys? Even though I don't see you, I'm sure you like it. Thank you for the comments. I knew you would like it. It's really a great program. Okay. Again, you see 600 there, FICO score? Gosh, it's lovely. Sounds very good on flyers. But I don't want the rates to be high, so I'm constantly trying to bring it up, but that's the minimum we need, okay? Here, look at this. 90%, sorry. 90%. I'm back at the 1099 program. What's going on here? Okay. 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 90% of the gross receipts used to qualify. Okay, you see it here? Who would benefit from this program? Real estate agents, tech workers, independent contractors, gig employees, and other clients who receive 1099. Okay, moving on. 40 years is not like the best option for everybody, but it's a good option for some people. I did a mortgage for my hairdresser and we did a 40-year because his goal was to keep the payments low. And he said, well, I'll refinance it later when the rates are a little bit lower. But for now, I feel more comfortable with this 40-year option. It's there for people who need it, guys. That's what every case is different. Every family is different. We want to cater to what our clients are comfortable with. Okay. Okay. Someone asked a question. Even if the year before it was claimed some loss, okay, you can report losses. I don't care because I'm not going to see it. I'm not going to show my underwriter your taxes. I will do the loan only based on your 1099 form. No tax returns, guys. Okay, did I make myself clear? That I don't care. You can please report losses. Do as much as you want because I'm not going to see it. I'm not going to upload those taxes, okay? That's why these are unique. These are great options. Profit and loss. The P&L that you see up on screen, that stands for P&L, profit and loss. Do you remember I did mention this to you? If the bank statements are not good, now we have the option of doing a profit and loss only. Okay, I've done many of these type of loans. I did my hairdresser. We did a profit and loss for him. He did a 40-year fixed, profit and loss only. No problem. We did that. Any questions on profit and loss? I'll tell you a little bit about profit and loss. My involvement with your accountant, with the client's accountant, is a little bit more. I don't want them to make a mistake. So I do get involved in that because I want to make sure that it's done correctly, because that's all there is in the loan. There's nothing else, just that one piece of paper. So I will make sure that I am in control and I'm in charge, and it's done the way it should be done. Okay? So this is an interesting loan, right? It's called verification of employment only. We just get a verification of employment form completed by the employer, and we fund based on that. We believe everything they write in that form without actually checking and getting tax returns from the borrower. So let's go over this one. It's a program that streamlines the income verification process by going straight to the employer. So now we're just getting the employer to complete a form and using whatever he writes there as income. Okay? Who benefits from this program? I'll tell you who benefits. Who benefits is like sometimes a client has had inconsistent income. Something, there is a gap, there is a hiccup where Fannie Mae is not calculating the income based on what's on paper. And now we say, listen, if I send you this form to your supervisor, can he just tell me what your income is without giving me extra comments? So it's just becoming a little bit lighter on documentation. Now, you see, you have to understand this is a legal program. I'm not putting taxes in. So even the underwriter knows there's a reason why I'm not putting the tax in. There's something that's lacking. There is some issue. But this program exists and we can still do it. Okay? Need a 680 score, 20% down. Again, it's just one form. It's crazy. The only one thing is that employer cannot be your brother or your mother or your father or your family member, because that's an arm's length transaction. Okay, we need an arm's length transaction. We don't want the employer to be related to you and now he's writing anything. We're not going to take it. It has to be a non-related employer. Okay, ITIN. What does ITIN stand for? Individual Tax Identification Number. There are many people, to put it simply, they're not legal. They don't have a social security number, but they work. They save money. They have good credit in the United States. This ITIN, it looks like a social security number. It has the same number of digits, just like a valid social security number, but it's not. How would you know that this number is not a social? This is an ITIN. Even though the digits are the same, there's just one way of knowing. Does anybody know this in this group? Anyone knows how to differentiate, how to say that this is not a social? Oh my God, this is an ITIN. Anyone? No one? Okay. All the ITIN numbers start with the number 9. That's how you know it. If you ask somebody, hey, give me a social, and you start writing and you see that the first digit is number 9, that's not a social, that's an ITIN. Okay? So they're not legal, but we have many, many options for them. We use the same program, full doc. Do they have full doc? Are we going to go bank statement only, profit and loss only? Are they an investor? We are going to do the DSCR. We do all of the same. The rates are I would say almost like a 1/4% higher than otherwise. But that's because only because they're not legal. Rates are slightly higher, okay? I want you all to know that. Any questions? I can just tell you something that these are very loyal clients. They refer a lot of business to me. I've done business for them in the past, and not only they save money. These guys, I did a mortgage for a restaurant owner in Montclair. We all know Montclair to be open as a restaurant, it has to be a good restaurant. This is a profitable. He has a profitable restaurant, Italian restaurant, and he has an ITIN. I've done not just his personal mortgages, but also his investment properties. He has a good book, healthy book of business. He makes good money, but he's ITIN. Okay. Who benefits from this? Clients, obviously, who have an ITIN, right? And why does this exist? Because it's easy qualification process for borrower who don't have a social. We have an option for people like this. I want you to know that. By the way, guys, I want you to know, there's an M&T bank across the street from my office, and they send me a lot of business because their bank, they don't do these portfolio lending. And I know the vice president there, and she's constantly sending me clients because they get rejected there, and then she sends them here because we're right opposite. So just know that when the bank says no, the big bank says no, doesn't mean it's a no. You guys need to lead your clients because we mortgage people are very aggressive. We do aggressive funding. The banks are conservative. You need to know bankers. You need to know us. You need to match the client with the correct lender. Okay. If you have a high profile client buying a $3 million home, is a doctor, makes a lot of income, 800 credit score, wants to put 50% down, send them to a bank. They'll probably give them a better rate. That happens too. You need to know both parties. Okay. That's my point. Manufactured homes, mixed use properties, unique properties. We do all of these under our portfolio lending. Okay, just want you to know. And all of these products and different type of income calculation I spoke, the same thing will apply to these properties as well. Okay. Very important. Most of our loans, we get exceptions. Okay, so there's an issue. Like it's almost like getting a story of a person and trying to find a product for that person and making it happen. So a lot of times I'll send an email to an underwriter. Listen, I have a client and this is the story. Tell me, can we do this? I need an exception on maybe I need 5% less down payment, or maybe the credit is a few points lower than what we need. Can you please look into an exception? So most of our deals, they approve the exceptions. We are working together to find a lending solution for a particular case. Okay. No landlord history. I've just listed the kind of exceptions we do. It could be we need to put down a little bit less money. It could be that the FICO score, the credit score is a little bit less. It can be the DSCR. I did one where the rental income was not enough to pay for the mortgage. We did an exception. We got it approved. The client got a rate, had to pay 0.2125 higher in interest rate, but we got the loan done. Okay? It could be condos, right? There could be a condo situation. Something's wrong with the condo. That's an exception. Okay? So I just want you to know that there are many, many reasons we need exceptions, and our underwriters will work with us to make things happen. Any questions? Okay. Let me see. Let me look at the chat. Okay, even if the year before it was claims, yeah, losses, I don't care about where to apply. If I'm just a starting realtor. If you're a new realtor and you're learning about these products, but I don't understand your question, where to apply, like that part I don't understand. So I don't know are you applying for a mortgage? Then you need to call me after this class and we can have a one-to-one conversation. Do you offer gift of equity loans? If so, is qualifying the same? Okay, to answer that question, first, I want everybody to know what is a gift of equity. I have two kids. If I want to sell my house to my son, I can gift him the equity and he can use that equity as a down payment. That's called a gift of equity when a family member gifts their equity to the buyer, and the buyer can in turn use that as a down payment. Yes, I do many gift of equity loans. Guys, I'm doing this for 30 years. It's been a long time, and I do a lot of mortgages. So I've done many of these gift of equities where a family member is selling to the other. We use that gift of equity without any money down from their pocket, they can buy a house. Mhm. Are we getting the slides or a summary after the class? Yeah, you're going to get the slides. I think, Ella, I've emailed it to, if you send me an email requesting whatever you need, I will send it to you. Let me send you my contact information before I forget. You can text me your contact card or you can email. I'll put my cell phone number, okay, and my email is right here. I hope you guys got it. All right, I work at Cross Country Mortgage. All right, now let's come back. Okay, CCM affinity lending programs. I mean, that's not something that's a part of this curriculum, but we do a lot of cross country mortgage. We offer like partnership with any company that has, I would say, 250 employees or more than that, or even if it's less, we do it on a smaller scale where we give them big discounts. All the employees, we do seminars for them. They get a huge big discount because we have the ability to market to them. It's just a business. It's for business. If you want a bridge loan, we do bridge loans as well. Co-marketing material. I want you to know that we have one of the biggest marketing portals ever. It's crazy how much stuff we have. If you want any of these loan products, you want to put your name and you want to market it, you have to send me your information and I can invite you. Once you accept, you will have access to all these flyers and way more. We have too much. But whatever, let's say if you're meeting a doctor and you want to know if there's any special doctor loans we have, you can go into our portal. Once you're accepted, log in, put doctor loans, and it will come up. It would prepare you for your appointment specifically at that time. If you're meeting ITIN, you know that this person is not legal. You can go and print out an ITIN flyer with your contact information on it. So you can do all these things if you want. Okay. Now, we have 5 minutes, but before we end, I have something to share with you, and that is um, condos. Guys, I get a lot of rejected loans from other big banks. They deny condos because the condos has some issues. Either they have a lawsuit, they have a pending assessment, they're going through repairs, they don't have enough reserves, there are too many renters living in the building as opposed to owners. If the condo building is not approved by the bank and they deny it, we have many, many products and options under our portfolio lending. I want you to know that. Okay. So, let me see if somebody said you don't see my contact information. Uh, this is my contact information, but I would rather you have here. I just typed my cell number again. So there you go. And the other thing I wanted to share with you is this flyer that Ella has. And if you want this flyer, this is like a one-page flyer that has all these foreign nationals. We do a lot of foreign nationals. If anybody, a wealthy person globally in another country, wants to invest in real estate in the United States, we do loans for them. Okay. Are rates higher? Somebody's asking, are rates higher for condo issues? 100% yes, they are higher. How higher? It depends on how bad the problem is. There was one deal I did where the problem was not really that big of a deal, but one deal I did where this building had a huge litigation, big pending assessments, repairs going on for 5 years. It's a Galaxy. It's called the Galaxy. It's in Guttenberg. It's a very popular building. We got it approved, but the rates were like almost 1 point higher. So, yes, they are. That was a big issue. So, I can email this to you. Okay. So, you have like a cheat sheet with all the programs we spoke about today. It's a simpler one to have rather than a PowerPoint because you can just, pin it up, keep it somewhere. Oh my God, I see Crystal. Hey, Crystal. I haven't seen her in such a long time. But guys, any questions? Any last questions? Anything I can answer?
Hi,
Is there a way
everyone.
to
So this
find?
webinar will
Let
be
me
recorded.
just a couple of questions. I see a question. Is there a way to find assumable loans in New Jersey? I want to answer this question correctly for everybody. So, why has assumable loans become so popular? Like, why does everybody want assumable loans now? Because there are a lot of homeowners. More than 80% of homeowners in the United States have lower rates, right? That's what we know during. They have pandemic rates. So the buyer says, hey, can I just assume their loan so they can take advantage of the lower rate that the homeowner has? The answer is it's not, it's very difficult. I don't know anyone who's assumed it yet. Number one. Number two is the only person who can say yes or no to the assumability is the lender. And lenders don't want to give the assumability either. But even then, if they do decide to do, they are the only people who can say yes or no. So call the number, directly call the lender and ask them that question. Okay. Any other question? Mobile homes. I don't do mobile homes, guys. Actually, we can do it in-house, but I haven't done a single. Because usually mobile homes are so inexpensive that people have been buying it mainly. A lot of people just buy cash. Um, please forward all. Can you send me a text? I put my cell phone number there. If you send me a text, you know what? Ella is going to send me all your emails. I'll email at least this sheet, this flyer to everybody in this group. I'll send it out, and then if you need anything else, please call me or email me, and I will send it to you. Okay? I just don't want to throw things to everybody. That's not necessary, but I'll just send this one because it's a summary. So it's a good one to have access to. Guys, I want to say thank you for participating. I had requested Ella. I said, please, I don't want this webinar mode. I like to see people. I want them to ask me questions and I want to see their facial expressions because I like that. But this is how we did it today. But I appreciate that regardless of that, you guys kept it going and you asked a lot of good questions. So thank you for attending and also paying so much attention. I appreciate it.
Thanks, Shital. I think we have one more question from Sandra.
Yeah, what is it?
Chat. She asked, can I buy a house now? And within 2 years qualify for a FHA loan for my own personal.
Good question. So FHA is only for primary residence. The answer is yes, you can get an FHA loan as long as you live in that house. Where if you own a house right now, as long as you're going to move to the other house, you can get FHA loan. But there are ways of strategically building wealth with real estate and using government money. And I'll tell you this really quick. First home, if you buy a multi-family home, get your FHA. The second home, now you go get a one family and then do 5% down conventional. I have a lot of clients' kids. I teach them how they should go about what do you do first, what do you do second, so you can maximize and get the best lending and get some government funding to your advantage. You can call me on the side if you want to talk a little bit about your personal stuff, okay?
Can you show your contact information on the screen, Shital, so they can your contact
100%. There
information?
you go. My cell phone is here, so that's good. Email, so you can, I don't know if you can see this clearly.
I believe you have a slide with your information on the PowerPoint.
Hmm. Can you see this, Ella? What do you think? Can
Yeah,
is can
I can see it.
you can see it, right? Okay, good.
Or if you guys need or have any questions, you can also email me at ella@ncjr.com. With the recording, we will send that to you as soon as that's up, and as well as the materials that Sheetal sent to me this morning.
Ella, you gonna send me their contact info?
Yes, yes. After
Okay,
this, yes.
perfect. So I'll send it to them as well. Okay, good.
Okay, I think we are all set for today. Thanks
Okay.
everyone for coming on. I don't think we have any more questions. Um, we have all your emails, and then we will be sending the all your contact, I mean not your contact information. I meant like your email to Sheetal, and she'll reach out to you. Thank you, everyone.
Will do. Thank you again. Have a great day. It's gorgeous outside. Enjoy it.
Thanks, everyone. Bye.